Leland Miller is the president of CBB International, China Beige Book. Welcome to the Biz Asia America. Let me first start by asking about the Chinese Shanghai Composite. It's up 20% now from the bottoms. In fact, it's just really been a few weeks since the December of last year. In your opinion, is this a new bull market?
It is a bull market, but I'm not sure it's based on the fundamentals. A lot of things play into why the Chinese stock market rises, but certainly one of them, beyond simply the economy rebounding, is the fact that the Chinese government has promised to allow more foreign money to come into the stock market, which helps with liquidity, helps with capital flows. It's something that people really want to see. So the part of the reaction right now is to that.
You mentioned a lot of the foreign money. Institutional pension funds, they make up a big chunk of a lot of the money flows around the world. Are they looking at China as a potential place for retirement funds and pension money? Is that a big area where, or does that explain where the money's coming from?
Well, if you would have asked me a couple years ago, I would have said this is a ridiculous question. But right now, people are chasing yield. They're in a world in which you can't get return on just about anything. So the dynamic of where people are investing is changing. What they're comfortable investing in is changing. Comfort with the Chinese economy as it gradually liberalizes is changing as well. So is it yet? Probably not, but I think it's on its way there if the Chinese government does the right things to open the markets up.
Your company, China Beige Book, surveys a lot of companies throughout China. So you have a very unique perspective on the challenges ahead. What do the surveys tell you in terms of economic challenges facing China?
Right. Well, we see a growth rebound, just like the official data does, but we also see some significant headwinds. And the first is inventories. We're seeing inventories rise regionally, sectorally. It's really overwhelming. And so there's a flashing yellow light there. There's growth, but how productive is the growth? The second thing is corporate loan demand. There's a lot of talk about how credit is easing and loans are out there for anyone, but we do not see that. And we've actually seen dropping corporate loan demand throughout this entire year.
In the last few years, there was a lot of talk about just the sheer number of Chinese investors, retail investors, I'm talking about specifically in China, opening up stock market accounts, trading accounts to invest into the Chinese economy. Where are the retail investors today?
Well, I think what you're seeing is a pretty interesting dynamic in which the Chinese are looking to invest abroad on foreign stocks, and yet the foreigners are clamoring to get into the Chinese stock market. Everyone's looking for something differently, and of course the foreigners haven't been putting most of their money in the Chinese stock market over the past 4 years and had to deal with this no return, this minimal return, and so they're ready to see some of the upside that the Chinese stocks promise.
Let's talk about valuation very briefly. 13 times earnings is a Shanghai Composite. Not expensive by any means. In fact, it's very comparable to even the U.S. markets in terms of valuation. How much upside is left from here?
Well, I think it has more to do with liquidity. You can have whatever PE ratios you want, and if you can't trade the stocks, if you don't feel like that there is going to be an upside ride for you, then you're not going to invest in them. So right now, I think that the problem is people want to see more liberalization. If they see the liberalization, they see things going the right direction, then maybe there is upside, and especially when you compare it to some of the other markets right now where return is just so incredibly low.
So much as expectations.
Absolutely.
All right, Leland Miller, thank you very much from CBB International.